I find the harder I work, the more luck I seem to have. Thomas Jefferson. My friends, the work is only 10 to 15 minutes a day, but it's each and every day to learn the nuances of how the market moves. That's all we ask, 10 to 15 minutes a day for greatness. You should be filling out your weekly market worksheet. That's what we do at the end of the week. When the weekly review and forecast comes out, as you're listening to it, watching the charts as we go through them, you're filling out that weekly market worksheet. It's a great way to start. We have those videos. I'll put them at the end of today's video again. The daily market worksheet, how to fill that out, the weekly market worksheet, and the trade worksheets. They will supercharge your training. If you will spend the time as you're listening to the broadcast filling out those worksheets, it will do wonders for you. It will help you see things you otherwise will not get without putting pen to paper. And I urge you to do it by hand. Don't do it on the computer. Print them out, fill them out by hand, collect them, hold on to them. They're worth their weight in gold. You will learn so much, particularly as you go through time, as you have more practice trades. That practice trade worksheet is like your almanac. It has all of the tricks that you learn, things that work, things that don't work, things to look for, things that you notice that you and you alone understand, and that will gain over time. It is, again, like building that reservoir of strength for those of you who've run like I did for years when you first start training or working out, and you just slowly build that muscle mass and that strength in depth, that endurance. That's what you got to do. 10 to 15 minutes, but it needs to be every day. Let's jump into these charts. We see stocks and bonds down, gold up, Bitcoin up. Now, what do we see going on with the S&P? We had an up week. The candle did go a little higher. The wick did go a little higher. But again, we've got a down day-to-day 0.17%. Not much, but is the market topping? Can't tell you that. I can tell you the price percent oscillator is still positive and flat. Derivative oscillator losing a little bit of momentum. Go to the 2-day chart. Did not cross over, going down. Now it did end this latest 2-day candle. It's a red spinning top, means indecision tending down. It's a solid red. Derivative oscillator also losing some momentum. Didn't cross over, but getting awfully close. We'll see how the new week starts. What do we see on that half-day chart? We just see that sideways slide, don't we? Up in the morning, down in the afternoon. Overall, down just a little bit for the day. Price percent oscillator heading down. Derivative oscillator gaining downward momentum. So we'll wait, watch, and see how these charts continue to slide through time. Now, of course, we get to the sloppy Qs, which has been laminated or almost laminated since the month of December through January, on into February, just not pushing through hard. We had that weekly vertical crossover back on the week ending the 5th of February. And again, what did we have happen? The following week, it was up nicely. That's the week ending the 12th. This week, ending the 19th, we have a red open box candle. That's a slowdown in the up movement. The high was 338.19 last week, 336. So again, about $1.50 or so higher, but not much to say for it. Remember, we're talking a $331 ETF, so not up very much. Price percent oscillators just above the red signal line, appears to be heading down. Derivative oscillator losing momentum. We look at this 2-day chart. What do we see there? It did cross over at the end of the day, for those of you who are watching, going down. It is a red down candle. No wick on top, wick on the bottom. So again, that's pretty decently strong down movement. And again, it did cross over going down. So that is definitely a sign, if you were in any type of trade and stayed in as this candle was developing, that of course would pull you out. No good reason to have stayed in. What do we see going on with the half-day chart? Of course, it rotated over going down back several days ago. Down hard, then sort of sideways for about a day and a half. And again, for the day, down 0.44%. Hadn't plumbed the low that it hit on Thursday morning, but again, down. So cues continuing to weaken. Hasn't been strong for quite a while as it's continued to just edge up. So we'll continue to watch. Remember, price percent oscillator, which is a percentage version of the MACD, the moving average convergence divergent indicator. If you don't have a lot of converging or a lot of diverging, then this lagging indicator doesn't work very well, as you have seen. It is our master indicator. When it's not working well, you know what I do? I tend to stay away till it starts working. We've got other choices. You're not stuck with one ETF to follow. So, unlike someone who is a professional trader on Wall Street that has to trade and maybe has a basket or a few things that they must trade, they're sort of stuck. You're not. You can make decisions. Again, the first rule of trading, don't lose money. Second rule of trading, make money. Never forget rule number 1. We're going to go to bonds. Bonds down for the day, 1.33%. Bonds have been beautiful, haven't they, for shorting. In fact, we see the weeklies now 3 weeks gaining momentum each week, hammering down, derivative oscillator gaining downward momentum, price percent oscillator spiking over, going down, 2-day chart. Same thing, 6 days of nice down movement accelerating. We had that 2-day recross for those of you who shorted bonds in your practice trades back on the 3rd of February. That was beautiful. Your jumping in point around the 150 mark, around $150. The low so far all the way down to 142. Don't expect you to capture all of that, but any of that is quite beautiful. And you might say, those of you who are new, why would I buy anything that's going to lose money? You wouldn't. You would buy TBF. That's Tango, Bravo, Foxtrot. That is the ProShares 20-year Treasury bond short. Means it moves in the opposite direction. Now, these are things for you to practice trade to see how much you like or dislike them. They revalue often. They hit you with higher fees. They don't always work that well. In fact, the more leveraged the fund is, the harder it is to have it work for you. You better be betting in the right direction or it will kill you. But I urge you, if you're interested in these inverse funds, to practice trade them. And then once you get good at practice trading, fractionally trade them. If you've got a broker who allows you to buy why would you even have to fractionally trade this? Look, it's only $17.15. It's not like the fund itself, which is $143 and some odd cents. So that's easy enough to fractionally trade. And what do? Then you buy a share 2 or 3, and you see what kind of percentage gain you can have on that. It gives you the ability to practice ordering, establishing ordering discipline, establishing discipline on selling, learning how to buy, learning how to sell, all of the little tricks and getting comfortable doing that. And again, you're doing it in a practice mode, not in an investment mode. We don't give investment advice. We are an education firm. We want you to practice with us, learn the nuances, get good, understand how the market works and all the mechanisms. Also, if you happen to be a Patreon supporter, guess what? We have for you a 3-part series. First thing we send out to our Patreon supporters when they sign up at any of the 3 levels, you know what you get? You get something very, very beautiful. You get our 3-part series, Options Made Simple, the Charting Wealth Way. In addition to the monthly call-ins that we do the first week of every month at 12:30 on Wednesdays. From all over the world, people call in and join us. We record that for you and send it out in case you can't join us. We take your questions, ETFs you're interested in us helping you backtrack and see how well they do for practice trading. We're happy to help. Now, we're going to leave the 2-day chart. Look at the half-day on TBF, and of course you can see that it's going down quite well. Nice to see all that. We're going to update our trend line. And again, we always want to try to connect 3. That is hard to do. Let's see, can we do? Yeah, we're close to 3. Nice trend line though. Price percent oscillator again heading down. Derivative oscillator gaining downward momentum. Now on our 4 big charts, lastly, we go to gold, which is up for the day 0.41%, but a big down week for gold. Look at that big down candle price well below the weekly and the 2-day. Price percent oscillator heading down, pulling away from the red signal line. Derivative oscillator gaining downward momentum. Look at this 2-day. Remember when we had the 2-day recross back on the 14th? Gold plunged down for us those next 2 days and then sort of slid up and sideways, but slowly started gaining downward momentum as it continues to crush down. Price percent oscillator heading down, derivative oscillator heading down. Now, there is no good inverse fund. DGZ used to be something that we looked at, but the spread's so big means that when you go in to buy it, you automatically have such a down position because the gap is so wide, it's illiquid. So we don't practice trade DGZ. What do? We practice trade options in gold. Those would be put options when it's going down. That's something good for you to practice. And again, take that training. So we see, again, the price percent oscillator on that 2-day chart stroking down along with the derivative oscillator. Half day, we can see where things plunge down and then sort of sliding sideways the last 2 days. So we'll see. Has gold reached a bottom? No idea. Is it just sort of gaining some digestion of these losses and going to get ready to plunge over going down? Could be. We'll continue to watch and see if this half-day chart crosses over going up. It could be swinging back for a little bit before it takes another plunge. So keep your eye on the prize. We'll see how low gold will go. I'm ready to jump into gold when it starts heading up. But that is not happening yet. That's where we are on gold. Lastly, Bitcoin. Is that not sweet? Those of you who have been practice trading Bitcoin with us, have we led you astray yet? It has been beautiful, hasn't it? Bitcoin, how high did it go this week? $53,665.01. We see the price percent oscillator pulling away from the red signal line. Look at that. It's curious, though. The derivative oscillator still negative on that weekly chart. Look at the 2-day chart. And again, we had that 2-day recross. You guys saw that back in mid-February, mid to early February, around, what was that, 9th? The 9th and the 11th. Those areas were, again, possible areas of jumping in, right around the same spot. And, of course, what did we have happen over the last 3 candles? Nice up movement as Bitcoin's continued to move up slowly away from the red signal line. Derivative oscillator gaining upward momentum. And of course, that half-day chart just laminated for the last few days, trying to stay above that red signal line as it continues to move up. That's nice to see. Again, those 2-day recrosses have served you well. And again, Bitcoin is not that hard to chart, at least recently, if you've been following our charts. That last weekly vertical crossover, of course, was quite beautiful, around the $12,000 mark, and like we said so far, a high of $53,665. That's where we are as we end the week. If you hadn't purchased our book, why don't you buy one? Support us. Help us out for all we do for you for free every day. Plus that book will be another thing to help supercharge your training. I'll autograph it for you and get it right out. Follow the link in the show notes. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.